It is Tuesday, February 16th, 2021, and I am Ashley Pollard here for another edition of Tuesday Talk, where we go over common real estate and mortgage related terms. Today's term is hard money loan, which is a creative way to purchase a property without using your own funds or going the route of using a traditional bank or other lender. Now, this is a short-term loan. A hard money loan is not what you use to purchase your dream house, and you don't get a 30-year mortgage with this. This is a loan that is going to be paid back within 6 to 12 months, maybe 2 years or 3, depending on what that hard money lender has agreed to with you. And the great thing about it is you're also not going through that long process of getting approved that you would with a traditional bank. Hard money lenders will be able to close within days or even 2 to 3 weeks. This is very, very quick process. Now, the reason that you would use a hard money loan is if you are purchasing an investment property of some sort, or you are looking to do a flip. You want to buy a property, renovate it, and then quickly sell it. That is when you would want to look into using a hard money loan. But there are some, flip sides to this. One thing is that the hard money lender will set their own rules for what your minimum credit score has to be, or what your debt to income ratio has to be, because they are going to look at the property value and not so much your credit worthiness. Traditional bank, they're going to check your W-2s from the last 60 years and go through a really detailed, lengthy process to approve you. The hard money lender is really just looking at the property value itself, based on the comps that you send them, based on the numbers you give them, and based on your experience. Are you an experienced investor? Can you handle this? They will then make their decision on if they want to lend you those funds. Now, because the hard money lender is taking a larger risk, you might see that they'll ask you for a larger down payment than you would pay on a traditional mortgage, or you might see a really high interest rate. Right now, traditional banks, you can get as low as 2.75% interest rate, but with hard money loans, you're looking at like 6 to 15% interest rate. And that's really just because of the increased risk, because they haven't gone through and, checked everything out about you. They really just looked at the property value, and if you had the experience, the contracting team, if you have the know-how to get the job done and get the property sold so that they can make their money back plus interest. Now, if you've been thinking about flipping, or you've been thinking about looking into hard money and you're just not sure how to get started, please give me a call. I will put you in touch with some hard money lenders who can speak to you and determine if this is the route you should go, or if you should look into purchasing another way. Thank you for tuning in to today's term. I appreciate you every week for tuning in, and I hope you all have a productive rest of your week. It is my birthday week, so next week I will be a whole year older when I come back to you. But thank you so much. Have a blessed day. Have a blessed evening, and I will see you all next Tuesday.